This Asian range strategy is insanely powerful. I backtested it across 2024 and the results were crazy. Every trade, every setup, fully documented. You can grab the full data PDF in the description below. If you want the step-by-step of this Asian strategy from scratch, check out this video. But today I'll break down a couple GBP USD examples so you can see exactly how it works. Let's dive in. So what we usually look for is the minor inducement, which we have here. Our minor inducement is Asian low. Next confluence is medium inducement, which we don't have here. In case you don't know what medium inducement is, it is just yesterday's high or low. Since we don't have medium inducement, what we can look for is major inducement, which simply means all the highs or lows that are older than 2 days. What I mean by that is that the criteria for major inducement are highs and lows that we will use as liquidity, and they must be a minimum of 2 days old. As you can see here, if you look to the left, we need a high or low, or better yet, we have here old low of Asian session. We can consider this one an old low because, as you can see, this is the low that caused this move, broke this high. It is a valid low, old low. We can use it as liquidity grab. Price already grabbed the liquidity. What we are looking for now, build up of liquidity. As you can see, we have here a few touches. Now what we are looking for is simply a change of character or charge. We have 2 points of interest or a demand. First, let's mark the break of structure. This is our break of structure and this was supposed to be our demand, but unfortunately, as you can see, this demand has no imbalance. Rather, this second demand has an imbalance. Let's move this rectangle over here. Stop loss below this low to be safe. You can also just put your stop loss below this demand, as you can see, like that, to get the most of the higher RR. Take profit above Asian low. You can also target, we can't say really if this price will take this high, but as you can see here, we have a valid supply over here. We can target this supply. Very easy, very mechanical to trade this one. As you can see, take profit hit. It has a mechanical rule, as you can see. Let's go to the next example so you can see how powerful is this Asian range strategy is. First thing first, we can mark the high and the low of the Asian session, because if one is taken, we will take an entry from there and we will target the other. And all I can see is this yesterday low. This is the low that caused this whole move, breaking this high. As you can see, very mechanical. Now what we are looking for is a sweep of Asian low, our minor inducement, and a sweep of yesterday's low. Now we have a sweep of yesterday's low. You can also see it is only wicked at the Asian high. There is high probability that price will go back up and take this high. Now what we are looking for, a change of character, something like this. Our demand is this one, the only demand that has imbalance. As you can see, there is imbalance over here, no imbalance here. So we will be taking this demand as our entry, stop loss below this candle, and take profit above Asian high. Very simple, very mechanical. Sometimes you will get 10R, 8R, and sometimes you will get 3 to 4 Rs. It doesn't matter. The most important thing is this is mechanical. So that's how the Asian range plays out again and again. Liquidity, inducement, and then the clean move. I have already tested this across an entire year and the results speak for themselves. If you want the full data, grab the PDF in the description, and if you are serious about mastering it, my mentorship takes you through the entire method step by step. Keep learning, keep testing, and I'll see you in the next video.